Hey everyone, welcome to Infinite Learning. Today I want to talk about one of the most revered and successful investors of all time, Warren Buffett. You probably know him as the Oracle of Omaha and one of the richest people in the world. But how did he actually get there? What's the secret sauce to his incredible investing career that has spanned over 60 years? Well, strap in folks, because today we're going to dive into Warren Buffett's journey from his humble beginnings as a teenager selling gum in Omaha to becoming the billionaire CEO of Berkshire Hathaway. We'll learn how he made his early fortune by spotting undervalued stocks and how his philosophy of value investing was really central to his success. We'll discuss some of his most lucrative investments over the decades, including Coca-Cola, American Express, and the Washington Post. And we'll also uncover how he built Berkshire Hathaway into a major conglomerate by acquiring entire companies at clever valuations. Basically, we'll explore Warren Buffett's life, career, investment style, and the key lessons that today's investors continue to learn from the Oracle of Omaha. So if you want to learn from one of the masters of investing on how to spot opportunities and generate wealth through stocks, you won't want to miss today's video. Now let's get started with Warren Buffett's biography and the strategies behind his unparalleled success. Warren Buffett is considered one of the most successful investors of all time. Often referred to as the Oracle of Omaha, Buffett has amassed a huge personal fortune mainly through investing in stocks and buying companies through his holding company Berkshire Hathaway. His astute investments and business acumen have made him one of the wealthiest people in the world, with a current net worth estimated at over $100 billion. Born in 1930 in Omaha, Nebraska, Buffett displayed keen business instincts from a very young age. As a child, he sold chewing gum and Coca-Cola bottles. In high school, he made money delivering newspapers and buying pinball machines to install in barbershops. After graduating from the University of Nebraska at the age of 19, he attended Columbia Business School before starting his investment career. In 1956, Buffett formed the Buffett Partnership Ltd. In his hometown of Omaha. He generated impressive returns by focusing on undervalued stocks that had solid long-term growth potential. Some of his early successful investments were in companies like American Express and the Walt Disney Company. He dissolved the Buffett Partnership in 1969, but continued buying stocks and companies for himself and his holding company, Berkshire Hathaway. One of Buffett's philosophies that contributed greatly to his success was value investing. This involved identifying stocks that were trading at less than their intrinsic book value and that had good fundamentals. Unlike most investors who focused on short-term gains, Buffett looked at companies' future earnings potential. His patience and discipline enabled him to hold stocks for the long run and benefit from their compound growth over time. Throughout the 1970s and 1980s, Buffett made a series of lucrative investments. In 1972, he started accumulating shares of the Washington Post Company, a steady performer on the stock market. He also invested heavily in networks like ABC and CBS, banking on the future of the media industry. In the late 1980s, he purchased a large stake in Coca-Cola, a position that would turn out to be one of his most profitable and successful investments ever. Apart from picking individual stocks, Buffett also displayed genius in acquiring entire companies that were undervalued or distressed. His holding company Berkshire Hathaway became a conglomerate of diverse businesses from insurance, candy, utilities, manufacturing, retail, and more. Some of Berkshire's wholly owned subsidiaries included Geico, Fruit of the Loom, and Dairy Queen. According to Buffett's principles, he invested only in simple businesses that he understood well, were consistent performers, had loyal customers, and competent management. He looked for companies with strong economic moats or competitive advantages that allowed them to fend off rivals and maintain pricing power. Avoiding high-tech and capital-intensive businesses, Buffett focused on easy-to-understand brands with time-tested business models. From the 1990s onwards, Buffett became one of the richest men globally. Even with his net worth crossing tens of billions, he still lived frugally in the modest house he had bought in the 1950s in Omaha. Though he donated billions to charity, mainly via the Gates Foundation, his massive wealth enabled Berkshire to continue acquiring large companies including Burlington Northern Santa Fe Railroad and Kraft Heinz. In his annual letters to Berkshire Hathaway shareholders, Buffett openly shared his investing wisdom, knowledge, and mistakes. He stressed having a long-term perspective, tuning out market noise, being fearful when others were greedy, and being greedy when others were fearful. Other tenets included investing in oneself, avoiding complex investments one didn't understand, and focusing on compound interest. Now in his 90s, Warren Buffett is still at the helm of Berkshire Hathaway, which has a market cap of over $600 billion. Though he has hired portfolio managers like Todd Combs and Ted Weschler to eventually succeed him, Buffett has no plans to retire. He still has an incredibly disciplined investment approach focused on buying great companies at reasonable prices. With humble beginnings as a teen entrepreneur in Omaha, Warren Buffett's incredible journey to amass a multi-billion-dollar fortune through savvy investments and acquisitions is truly remarkable. His patience, discipline, and focus on fundamentals rather than speculation are lessons that investors worldwide continue to learn from. Buffett's commitment to keep learning, evolving, and generously sharing his wisdom well into his 90s is a testament to his title as the greatest investor of our times.